Hi, everyone. Roger Connect, president of Universal Accounting Center. And again, we have with us Erin Moger with Profit First Professionals. And this is going to be a wonderful conversation because, as I understand it, we're going to be talking about specifically the interaction we would have with a business owner as we're introducing them to this Profit First philosophy and how it is that they can literally make profit a deliberate part of their being in business. So, Erin, take it away.
Got it. We're going to be talking about how this can look for a client, but we found that the best learning is done by doing. So I will actually be sharing with you how to do this for yourself. Profit First is a very emotional system. Actually last we spoke, we discussed how a simple, profound tweak to how we function as a business can really change how we capitalize on our resources. If you remember, we crossed out the sales minus expenses equals profit equation.
That's
and
right.
We plugged in the sales minus, it's not working. We plugged in the sales minus profit equals expenses equation. We shifted from a logical perspective into a more biological perspective because Profit First is a behavioral cash management system. So in order for us to actually understand how to share it with the business, I did just want to take a minute and recap. We also discussed 4 core principles that we can implement in our businesses today that can change how we function and that can yield a lot of insight. The first one that we discussed was small plates, taking a big picture of our finances and breaking it down intentionally into specific categories for clarity. We also discussed, taking care of our nutrition first, eating our vegetables first, and that's very applicable in our financial lives as well. Profit is really the nutrient in our business, and we need to prioritize it. But we also need to eliminate the temptation. Those cookies, get them away. So much harder.
So there's something here I'd like to share, and I think this is because of a conversation that I've had in the past, and it's the fact that that first principle of the smaller plates, as you look at our psyche, if you have a plate and you have space to fill, you fill it. And so this whole idea of basically creating that box first of the plate being as small as it is does limit then how much you can put on the plate, therefore how much you're going to eat. And it applies to business as you're describing, but this whole visualization of deliberately basically planning the meal applies to us in business.
Yeah. And instead of using small plates in this circumstance, the principle is really breaking down that big plate of food or that big bank account into small, intentional, strategic bank accounts. Again, yielding clarity, giving us more insight into the intention of every dollar and allowing us to capitalize and make better decisions in it. Of course, a piece of that is removing temptation. Even though we may be intentionally prioritizing our profit, putting money into a profit account and taking that step in the right direction, we are subconsciously still going to be reliant to some degree on that savings piece unless we remove it from our mind's eye. So taking that piece of savings, both our profit and our tax accounts, plugging them into another bank where it's a lot more difficult for us to get in touch with that money, but also where it's not forefront of mind every time we're looking at our business and making decisions in the day-to-day.
Mm-hmm.
The next piece is rhythm. One of the most impactful things that you can do for your business is to have an understanding of how things flow. Money in, money out. It brings clarity. And you know what? We are going to be doing that with our money on a regular basis using these accounts where our big plate, our money is going to build in our income account, build. Then we are going to allocate intentionally into our profit, into our owner's pay, into our tax, into our operating expenses, those smaller plates. And today, our goal is to not only have a conversation around what that looks like from a profit first perspective, but our intention is to take this and make it personal. Let's look at your business. If you had to allocate today in a percentage point, what would it look like for you? Right? Right now we're talking concepts, but in all honesty, let's talk cash. I don't know about you guys, but how much money did you actually make last year? Yeah, I can't tell you how many times I've asked that question, and the response has been, well, my P&L said I had $60,000 in net income. But I'm really confused because I don't have enough money to pay for my payroll. I don't have even close to what I need to pay for my taxes on that profit that I experienced. I'm not paying myself. I'm maxing out on my credit lines regularly. I mean, God forbid I'm able to pay for my next job coming up. I'm still trying to pay off the one I did last time. So this whole piece of let's talk about our cash is, quite frankly, our net income number in a nutshell. There's a lot that takes place outside of that number. And that's where we find ourselves in a cash crunch. If we don't have the cash on hand, it doesn't count. So if cash is king, I mean, how healthy is your business really?
And one of the things that I think is important here is, for those of us who are familiar with the difference between accrual and cash accounting, there's a lot of businesses that run on an accrual basis, and it does give the proper understanding of what's going on in the company. But when it comes to the cash flow, there's a lot of times there's that disconnect between that profit of 60,000, as you were sharing earlier, and there being 60,000 in the bank. And so, yeah, you can be profitable, but if you don't actually have the cash, when the tax man cometh, there's a problem there. And just recently I took on a client, and they were sharing with us the grief that they experienced because they weren't properly managing their cash flow. And when it came time to pay taxes, they literally owed $96,000 and did not have $96,000. Now, one of the big things that we always want to focus on is the tax is kind of a nice way of celebrating the profit. I mean, you made money. That's why you owe the taxes. But at the same time, you got to be able to pay it. And so they weren't doing it properly, and it ended up having to be this negotiation to pay, and then ultimately a line of credit to get the funds to cover that debt. So if you're not on top of this, it does hurt very much in a real way.
Yeah, it does. And it's also one of those things too where, it just because we have to pay it doesn't mean that we're not vigilant in exploring our best options. So while we are talking about paying cash for our taxes, we also want to make sure that we are heeding advice and taking steps to be able to position ourselves to maximize on our profits and not have to pay unnecessary taxes just because we're filing by ourselves. So there are definitely ways that we are going to be utilizing this evaluation of our business to ask deeper questions like that one. And actually, it says here, it's not a guessing game. As much as we like to talk about cash, we like to have this concept of how healthy am I. We don't have to sit there and try and put it together by just little pieces here and there. We can be really intentional in diagnosing really how healthy our business is. And that's what I want to share with you guys today, how to run a Profit First instant assessment on your business, the level 1 breakdown of what might be happening under the surface to help you address this question with more clarity.
Perfect.
So in order to do that, we actually are going to be using a number of different statements, but just to bring a little bit more clarity into what I'm talking about, if you have not read Profit First by Mike Michalowicz, this information can be found in the book. Okay, we're starting on page 62 with what we're talking about, but we are taking this breakdown of the business and we are comparing what we look like as a business to some of the most elite businesses in a specific revenue range. This is based off of a lot of research done by Mike Michalowicz. He actually ran a survey and analyzed 1,000 of the most elite businesses in specific revenue ranges to determine what we're looking to target. But in order for us to determine where we want to be, we have to know where we are ourselves. So we are going to be focusing on these main categories in the actual column, if you will. But in order to plug this information in, we are going to be using our financial statements. So if you have access into your books, if you are an accountant, bookkeeper, and you can just run the financial statements, it is a lot more simplistic. If you are a business owner doing this on your business, ask your accountant, bookkeeper, whoever is in charge of your finances to gather this information for you. But we are going to be using three main documents, okay? We have our profit and loss statement, we have a balance sheet, and we also have our personal tax information, okay? Profit First is a cash management system. So as we mentioned, we are going to be using cash basis, okay? If you only have accrual, if that's all you know how to run, go ahead, run it. Start, take a look and see what's happening. But cash basis is going to be most pertinent to what's going to be happening in an implementation of the Profit First cash management system.
Perfect.
Okay. I also want to let you guys know that when we're running this, typically we run it on a full year. Okay, that allows us to see where we stand in a more simplistic and smoother perspective, because seasonality is pretty much leveled out, and you're able to have a bigger, deeper picture as to what's going on. So we're in a good position now. We're in 2019. We have probably a full year of financials all squared away and ready to go from 2018. So if you can grab your numbers from January 2018 through December 2018, you'll be in a good position. I do want to just add a disclaimer in here, okay? The tax information is going to be helpful. I will be sharing with you how you can utilize your financial statements to generate some more information around the tax.
Okay.
But the more complex your household tax information is, the more questions it might yield than clarity.
Okay.
Okay. So if it is too complex, please consult a professional to ask these questions. But otherwise, just remember, guys, what we're doing today in the instant assessment, this is level 1. Our goal is to get started.
Too.
Yes. So our goal is really to get started, ask questions, see where we might stand, and bring more insight into how we can start allocating and utilizing those small plates, even starting today. Okay. So I'm actually going to go through this assessment line by line, and I know there's a lot of verbiage in here now, but it will hopefully help you have a little bit more insight into how you can take our financial statements and what it is that we're looking for when we are running this assessment. And again, you can find this on page 62, pretty much through page 70. But let's pretend like we have our financial statements in front of us and we have an instant assessment and we're ready to roll. Okay. The first thing that we are going to do is we are going to determine what our income is. It's the easiest thing you're going to do all day. We're going to open up our P&L and we're going to take our income, our revenue off that first column. Okay. Then once we have determined that number and we plug it in here where it says income in our actual column, we're going to determine our materials and subcontractors. Okay. I went to school for accounting, okay? When I first heard materials and subcontractors, my brain went immediately to cost of goods sold, okay?
Natural, yes.
Yes, tell your brain not to do that. That's a no. Okay, when we are talking about materials and subcontractors, we are talking about physical, tangible goods to produce a product, as well as the outsource expertise to facilitate one. Okay, so when I'm saying materials and subcontractors, if you think about it like you are a contractor, you're building homes for a living. We are going to evaluate the lumber, the drywall, the nails, that amount that is put towards those products is going to be in here, as well as, you might need a foundational specialist to come in and evaluate the quality of what you're going to be building on. Somebody that's not typically on your team. That foundational specialist that's coming in, they will be considered here. Okay. There are 2 rules of thumbs when you're evaluating this though. Okay. First one is, are you a service-based business? If you are a service-based business, the likelihood of you having materials and subcontractors drops drastically. Okay. If you are a service-based business, okay, and you have a number of subcontractors, or you're a product-based business, the next question we'll ask is, well, how significant is this piece of your business in relation to your revenue?
Yeah.
Okay. And again, this goes back to the fact that it's a behavioral based system. So if it's not a significant percentage, and we consider 25% or greater to be that of a significant percentage,
Okay.
if it's not a significant percentage, then we do consider it operating expenses. Okay. So it's going to be okay. The reason it's wired like this is, again, it's behavioral. We have a tendency to justify anything above this real revenue number. And where we justify, we also often lack the ability to make big decisions, or we're missing out on another area of profitability or health, right? So when we're running the evaluation, it's okay. If this isn't perfect the first go around, put it in operating expenses. We can always move it up later. But err on the side that it's probably operating expenses unless it's in this category, okay? And then we can take it from there. The reason, again, we look at this the way we do is because we have our revenue, right? We have our revenue number, the income number. When people ask you how healthy your business is, usually the first thing you think of is how much money did I make last year?
Yeah.
Right? That's how people answer that question. That's not how healthy your business is. Because what happens is if you might have a $5 million company, kudos to you, well done. You might find that your materials and subcontractors are $2-3 million, right? That's for you to even produce the $5 million. The danger in saying that you're a $5 million company comes in the day-to-day. If you are walking about thinking that your business is a $5 million company, you are going to function like you are a $5 million company, when in actuality, you only have that $2 million to work with. Again, it's a very behavioral perspective. It's a very behavioral approach. But our goal is to determine this real revenue number. This is really the MVP of the entire assessment, because it gives us that perspective into the business of what they actually have to function. And it changes how we function in the day-to-day. And it's a simple equation. So instead of top line revenue minus cost of goods sold equals gross profit, our perspective is revenue. Okay, we have our revenue minus materials and subcontractors equals our real revenue amount. Okay.
And now we get to run the business.
Yeah. And this is important too. Okay. Always err on the side of caution. If you're not positive, put it in operating expenses. You can always move it up. Because our real revenue number is where we determine where we stand from a percentage standpoint. And that's what we compare to our Profit First target percentages, which I'll get to in a second. It's really important that we have a good understanding of what's going on in here, because the rest of this entire chart is derived based on this number. Okay. Moving on is the profit piece. Okay. This is probably the most complex equation of the entire assessment. Okay. And the reason is it's a very different perspective than, again, most of us have. When we hear profit, we'll probably look at the P&L, take a look at the net income, net loss, and we'll put that in here. Okay. But when we're talking about profit from the Profit First perspective, we are talking about an emergency fund. This is savings. This is for, God forbid anything happens in your business, you have money aside to sustain your household and to pay your bills in the business, right? So when we look at this, what we're going to ask when we're looking at the financials, you can look at the balance sheet. If they have accounts open, you can say, okay, well, you have the savings account. How does that function, right? You can ask and see if there's a little bit more of an emergency fund definition to that account. But really, money in the bank that is set aside intentionally as an emergency fund, as profit, that is really what we consider to be profit and nothing outside of that. Okay. So for most businesses, when you're running this number is actually going to be zero unless they've already started implementing Profit First, or they have an account that has a similar definition already open and functioning.
Very good.
Okay. And I do want to encourage you too. Don't be afraid to ask questions. When you're doing this for yourself, when you're doing this with clients or just practicing, don't be afraid to dig a little deeper. If somebody has a savings account open and you're saying, okay, well, there's a decent amount of money in there. Tell me, what is that account for? They might say, oh, this is for, I'm hoping to invest in some marketing moving forward, or I have a big piece of equipment that I have to purchase in the next few months. Even though you might look at it and your first instinct might be this probably a savings for an emergency, if they have a different perspective, we want to make sure that we have understanding of that. And when in doubt, again, just keep it in operating expenses. You can always move it upwards as we learn more.
Yeah.
Okay. I do want to let you guys know our goal in this is not to make it look pretty. Okay. We're not going to try and make it look worse than it is. But if we do our best to make this look pretty so it doesn't hurt so bad when we're running it for ourselves or with our clients, we're not putting ourselves in a good position for our clients. What's going to happen is they go to start implementing, allocating in different percentages, and then they're short X amount of money and they have to figure out how to go about things. So be true, be honest. If you have questions, ask them. If you're not 100% positive of where things go, consider it operating expenses. It's a lot more exciting to move it upwards and for the owner's benefit than otherwise. Okay.
Well, one thing I'd like to jump in and add, and this has been helpful in the conversations I've had with the business owners, is really when we look at profit, I liked how you described it as being that emergency fund, but the conversation I'll also have is related to, look, if your employees weren't getting paid, how long would it be before they would stop coming to work? If you're not getting paid, how long would you do what you're doing if you were never able to take home anything for this work that you have? But ultimately, the profit is, this is why the company is in business. If the business isn't making an earning, if it isn't generating anything, it can't then reinvest in itself. And so as the owner of the business, you're the steward, much like a dependent child, as to how that money gets spent, because it can't necessarily decide for itself what it will do. But that profit is what the company is earning for being in business. And so you always want to have something there so that the company can invest in new equipment or new marketing or invest in a new employee, because that's how the company will grow. And so that investment isn't coming from the owner. It's not you reinvesting in the company again and again and again. It's the profit that the company is making that it's able to use, like you would your own bank account, to go to dinner or go on a vacation. It's you building that deck in the back of your house because you made money and you put it aside in your own personal account to invest in yourself. Well, that's the profit that the company is using to basically meet its demands. And so the profit is you paying the company for existing, just like you're paying yourself and the other employees. And then obviously you've got good old Uncle Sam there, perhaps, that you're paying for taxes. So you're taking care of each of the principal parties here that are essential for the company to exist.
Yeah. And I do want to let you guys know too, we're putting money aside for an emergency, but we're also going to have fun with this money. Okay. When we get to a point where we have a decent reserve in there on a quarterly basis, we are going to be taking out portions of this profit account and we're going to be paying you, the business owner, above and beyond what is expected in your life. Right? We might be taking this out and using a big chunk to punch debt in the face. You know what I mean? This is a great way for us to utilize our extra resources, our intentional resources in fun ways to be able to position us so that we have freedom, both from emergencies, but so that your business is treating you the way you should be treated. Because again, you're right. If the business isn't making at least 2-3% in profit, you own a job.
There you go. Well said.
Right? So the other piece of that is, the profit owners pay tax. These three accounts go to benefit the owner. Okay. But when we're looking at owner's pay, a lot of times, oh man, Roger, when I first started this job, I can't tell you how many times my heart just melted for entrepreneurs when they would just say, oh, I haven't paid myself in 10 years. You hear a word like 10 or a number like 10 and you're like, oh my gosh, what homeless shelter are you in? Are you, is everything like, how can I help? And it took me a long couple months to figure out that when they say they haven't paid themselves for 10 years, What they meant to say is that they haven't taken a paycheck in 10 years. Okay. When we look at owner's pay, we're looking at how the business sustains their livelihood. What is their standard of living? And it doesn't necessarily matter in what format they achieve that. Okay. We might be looking at salary. We might be looking at draws. We could be looking at both of those things if they're an S corp, right? We could be looking at distributions. But we could also be looking at personal transactions through the business. And what I've found is that in most circumstances, when you have a conversation with the business owner and they say, I haven't paid myself in a drastic amount of time, it typically is because a lot of this is happening through personal transactions into the business. So again, this is where questions are really impactful. But our goal is to determine how the business owner sustains their standard of living and how the business is supporting that. Sometimes it's heartbreaking, but the answer is the business isn't supporting that, okay? And they really haven't taken any money home, right? However, we want to be vigilant in understanding this a little bit more, because we want to also give them an opportunity to have the business support them or bring more clarity and intentionality into the business supporting them, even again, if it's a small number to start with. So when we are evaluating owner's pay, it isn't just a salary. I mean, we will be looking at their P&L. We'll see if there's any officer or principal wages. We'll plug that in there. We'll look at their balance sheet. Are there any draws? We'll plug that in there. But we'll also take a minute and we'll look to see, okay, well, is there a vehicle in here for your virtual office that you don't ever go on sales calls for? That might be a vehicle that's more personal than it is, business. Let's ask them about it. And again, I always go back to be vigilant, ask questions. Don't be afraid to have a conversation with the business owner. If you're running this on your business, don't be afraid to ask yourself, do I use this more for personal or do I use this more for business? And if the answer is I use it more for personal, it's owner's pay, right? Yep. So things just to be mindful of as we're going through and we're taking a look at that piece of the puzzle.
Well, one of the things that I find that is very common is as I've had this conversation with business owners, it's amazing to me what they don't consider to be pay. And so they'll go through and there are those instances where they actually start with kind of the pity party of not being able to really take home anything. And then you come to find out, as you've shared, that there are a lot of other ways that they're actually being compensated, but they're just not considering it as it perhaps should be. But the real crux of this is, I think you're right, asking a lot of questions, understanding without judgment what is actually happening. And then later on, we can talk about, is there a better way or a more right way to perhaps do these things? But initially, it's just basically finding out what's their perception of what's happening and in reality, what is occurring, and then we'll better it later on.
Mm-hmm. And just remember, this is all level one, guys. There's a lot more for us to determine and in store as far as calculating and really bringing this to another level for the business owner. This is the baseline. We just want to get started. We want to have the conversation and be able to bring a little bit more light into the health of the business for the business owner. And we talked about the tax piece a few times. This is, just to clarify for you guys, when we talk about taxes, we are not referring to payroll taxes. We are not referring to sales taxes. When we talk about taxes, we are talking about how the business owner is paying for their personal income taxes. Okay? This is directly related to the business owner and nobody else, except for, if the business is profitable and they owe state federally for that business responsibility. Okay. Yeah. But we are talking about how the business is providing for that tax piece. We're looking at this, I mentioned on the first webinar, let's say the business owner made $10,000, right? They took a draw of $10,000. What happens oftentimes is they take that $10,000 and they have it spent before they get out the door, right? But then the tax man comes knocking and they owe $3,000 of that and you can't find it. It's nowhere to be found. So the business is taking initiative to put that $3,000 aside before you even see it, putting that $7,000 that you would be paid in a draw intentionally into your owner's pay. and creating more balance. We do have, again, targets that we'll be mindful of moving forward. But just to reiterate, when we're looking at this profit, owner's pay, and tax, these three things are meant to benefit the owner. They are for the intention of making your life sweeter and a little bit less hectic, right? So the more intentional we are in these accounts, please don't look at it like saying, okay, well, if I'm profitable, then I'm not paying myself as much. You might be in a place where you're paying yourself a huge chunk of money. You might not be on that poverty side of things. You might be overpaying yourself. Kudos to you, right? Now let's look at it. I'm not going to ask you to take less owner's pay, but you might find that having a little bit of savings really warrants a little bit of emotional freedom. Being able to take that money with confidence can be impactful like none other, just by saying, okay, listen, I'm taking this money out of my business. I know my business can afford it. And you know what? Maybe instead of taking all this money, last year I was a little short on my taxes. I'm going to put a little bit more aside into that tax account. You're still paying yourself just as much. You're just doing it with a different structure and a little bit more intention. So once we get through these three areas of, evaluation, we're going to take a look at our operating expenses. Okay. And this is where we really want to be mindful. Okay. It says total expenses here, but this is really your regular cash responsibilities. Mm-hmm. Okay. We are going to look at our P&L and we're going to take a look at all those expenses. We want to be mindful not to double account for anything. So if you did have salary that went through on your P&L, we don't want to make sure that if it's in our owner's pay, that it's eliminated from our operating expenses so that there's no overlay. But we also want to consider things that are happening outside of operating expenses on our balance sheet. How much are you paying towards your debt? What kind of debt do you have? Things like that. We want to be mindful of things that are taking place outside of just our day-to-day operating expenses. What are our regular cash responsibilities? That's what we're going to be evaluating when we run this piece of it. Okay, so once we go through and we take a look at our financial statements, we plug each number in, and I encourage you to write notes. As you're doing this, this isn't going to be the first time you do it, or this might be the first time you do it, but this isn't going to be the last time you do it. Take notes, identify areas that kind of weren't as clear to you, and spend a couple minutes, reach out, shoot me an email, let me know what questions you have. Take a look at profitfirstprofessionals.com, find a professional to do this with, come register with us, try and go through the program, understand it for yourself so you can position this for your clients. Don't be afraid to utilize us if you do have questions and want to dive a little deeper. Because again, we are working in the instant assessment. It's only going to get more complex as we get in there. And the more that is going on in the business, the more difficult it can be to kind of navigate through the nuances. Okay. So I do just want to give you freedom to have grace for yourself. This is going to be our baseline. This is where we are going to start from. As you get into implementation, there will be areas where you might have to navigate around different nuances based on your business, right? Based on your goals and just what you define success as, right? So we will be spending time intentionally learning a little bit more about you and your business. But the big piece of this is determining where you stand, right? How healthy are you? So we ran the evaluation with the numbers, okay? If we take those and put those into percentage form, what does it look like next to these, right? This is actually a chart broken down by revenue range that documents where most of the elite businesses in this revenue range sit. Okay. We live in a world and a market where we define our success by industry standards. Okay. It's good to have an understanding of where people in the industry sit, but I want to tell you, those industry standards are averages. If our target is that of an average, guess where we're going to find ourselves? Average. I don't know about you, but I don't want to work my whole life through to sit in an average position. I want to be among the most elite, which is why when we look at these, we don't break it down by industry. We don't break it down by anything outside of who is most elite in each revenue range. Okay. This doesn't necessarily mean that you're going to fit into this box. Okay. Because I do understand it is a little bit of a box. Okay. You might find that you exceed it, right? You might find that your sweet spot is just a little bit off, or that your definition of success is in a different breakdown. You might want to pay yourself a little bit more and spend less in your operating expenses if you can do that, right?
Yeah.
We are not looking to put anybody in a box. Our goal is to take the Profit First structure, position it to inform you, to bring clarity into the day-to-day operations, identify a strategy or a prescription, if you will, to achieve your optimal health, and then empower you to be vigilant in it, right? If we are not putting ourselves in a place where we have the freedom to identify what is successful for us or what we want to achieve, it's going to be difficult for us to achieve it, right? If we are not in a place where we are able to ask questions and be free to identify our own personal success, we're going to end up just hanging out in a place where we are still not our best selves. So our targets, while you may not ever reach these, right, because your optimal health might be on the line, we are always going to strive to work towards them, okay? In your industry, I mean, for example, let me just bring this back to a thing that makes sense, okay? Medical industry. If you are a doctor, you're making a big chunk of money, right? Most doctors in the revenue or in the medical industry, they have to make $1.5 million in order to sustain their payroll, right? Mm-hmm. If you are making a significant amount more in your payroll, that's going to be reflected in your operating expenses. So if you are a doctor's office that hasn't necessarily achieved your optimal margins, right, it's going to be a lot more difficult for you to achieve this number. So we're going to address that. But you might find that in the IT or the medical industry, your optimal operating expense percentage is more like 46% at your healthiest, right? While you're bringing in the appropriate revenue to support that. We're not going to tell you that you have to shove yourself into this 30% because it might not be realistic considering the more significant payroll rates for your industry. But what we will do is encourage you. How can you capitalize on every resource that you have, right? So right now, the industry standard is you have to bring in $1.5 million if you have a physician on your team. How can you bring in $1.7 million? So that way you find yourself, maybe you can function at 44% here because you've been able to capitalize on every resource that you have. So having these targets in place drive us to be a lot more innovative and put us in a place where we're asking deeper questions to not only exceed standards, but hopefully to find ourselves in this elite platform or at least our optimal health.
Well, one of the things that I feel that the chart actually helps provide is perspective. It's one thing to know what your numbers are, but if you don't have anything to compare them to or anything that you can use as a gauge to assess those numbers, the numbers are baseless. And so this right here actually gives us a chance to now, using the numbers that we have, see where we are in line with basically trends, or as you've indicated, target allocation percentages. And now we have something to work towards, and either through that perspective we're doing fine, or we're now challenged to do that all that much better.
Exactly. And this is just a breakdown of the percentages. You'll find that once you take them and plug them into the assessment sheet, it does bring a little bit more light. We will spend a couple minutes and do some math in here to make sure that everything is plugged in. But here we are. You see in the actual column, this is the information that we derived from running the assessment, the instant assessment, the way that we did. Then we have our profit first percentages, which we pull from that target allocated percentage chart. And again, you can find this information on page 70. One thing I do recommend, though, it's not in the book and it's not wired like this, but when you're looking at dollar values and then you're looking at percentage values, you're kind of comparing apples and oranges. Okay. It doesn't register the same. So I do encourage you to, put a little slot in there, determine, what percentage point your operating expenses are to your top line revenue. In the circumstance, I think they're 76%. So there's room for improvement. And this is where we start to see how we can impact the business by just having an understanding of what's happening. Okay. In this circumstance, their profit, they might have a couple bucks aside, high five, but it's still 0%. This will allow us to see, all right, based on where we are, based on where we want to go, what do we have to do? From here, we can ask more questions. We can generate what we call a rollout plan to achieve these gradually, which is where it gets fun. Honestly, that's my favorite part.
Yeah, it's the tweaking. It's the creativity of what next.
Yep, exactly. And this is where you can say, hey, listen, my ideal situation is instead of me getting 10% in owner's pay, this guy is at 190%. And I believe that's more like, or $190,000. I believe that's more like 15%. I'm not going to tell him to cut his pay if he's doing well, right? Cool. If that's what your lifestyle if that's what your lifestyle is functioning at, make some tweaks to your personal life, but how can we make the business support that? Right? The answer might be in operating expenses. It might be in sales. It might be in systems and processes. We're going to explore all the avenues to achieve this while we, again, are focused on achieving and understanding how we can make the business as profitable as possible in the most healthy way possible. So once we run this assessment, like I said, this is going to be the first time you do it, very likely. It will not be the last, okay? If you are truly implementing Profit First, I do encourage you, be vigilant, okay? Don't just do this once and then come back in 3 years, because what happens, again, is you're going to find that things weren't necessarily as strong as you had hoped, or, that you lose the intentionality, okay? So I do encourage you, run the assessment once, start implementing, even if it's just you take what your business is capable of now and you start allocating there. If you know that you have 76% in your operating expenses, start putting 76% in your operating expenses. Take what you understand of your business, get started, but stay vigilant. And keep an eye on this. We typically do this on a quarterly basis. We'll have an evaluation. We'll do an expense analysis. We'll talk about goals. We'll generate an action plan based on the needs of the business, the pain points of the business and whatnot. But the key is don't just do it once, implement, call it quits. You're good for the rest of your life. No, that's not where we position ourselves to really capitalize on our efforts of this first level, right? We want to make sure that we're continually growing, continually striving towards our strongest business, if you will, financially and from a systematics point of view.
Well, one of the things that I truly love about this whole discussion is, first and foremost, many of the business owners I interact with love a challenge. And when they know that there's a way that they could be doing this differently or better, or that there's a system that they can follow to be more effective as owners of their companies, they just love it, because once they see that there's something that they can kind of plug into, they're excited about now, working within that system. And so when you adopt this and you really kind of put the priority on profit being first, this is the perfect thing that you need to implement within your company to actually make it possible. And the other part of this, and you started by saying, it's first and foremost applying these principles ourselves. It's being the guinea pig, right? It's basically practicing what we preach. And so your emphasis on saying, here's what we each need to be doing in our companies. Once you now kind of digest this and take it in and say, I'm going to do this wholeheartedly, you really start to then experience the same emotions, challenges, frustrations that everyone else is going to experience as you help them roll it out in their companies. So this is perfect. It's not only an excellent explanation of how to look at applying these principles in the business, and you presented it perfectly from the book, but it's also this idea of practicing what we preach, seeing what it is we can do to improve our own businesses, and then taking it as the motto of and mission of Profit First is, which is eradicating entrepreneurial poverty. This is the perfect way to do it.
Yeah. And you know what? It sounds silly, but beyond anything else, I mean, you think about, as a business owner, mind space. You know, you might be paying yourself right now, but you might take that paycheck and not deposit it for a couple weeks because you don't know what's going to happen. There's freedom in understanding what is going on in your business and knowing that your business can support you. So even if it's just one little piece that you apply today, you know, I do encourage you to take one step in the direction of clarity, because you might find that it'll trickle and have a way bigger impact than you had ever anticipated. So don't be afraid to get started. And I do encourage you, like I said, if you have questions, you know, come find us, profitfirstprofessionals.com. You know, let me know how I can help, what questions you might have. I will, you'll find that there is going to be a one sheet with a bit of a breakdown around the instant assessment and the charts that we discussed. But the Profit First book is definitely a place where you can go to get all this information in a pretty clear format.
Yeah, and the books is an excellent read. Excellent read. In fact, we'll put a link here in the description to go and get that. And one of the things that I'll also include is, as you suggested, is basically a link to becoming a Profit First professional and how it is that one can actually use this as part of, in an accounting firm, the services being offered to the business owners that you're actually working with. So, so many of the people that we're interacting with here at Universal Accounting Center are in fact firms that are trying to offer more value-added services beyond their traditional accounting services, such as the bookkeeping and accounting that they currently do. And so this is perfect because it enables us to really move into that space of being the advisor, that trusted strategic advisor, so that we can actually get paid more what we're worth, because these are more consultative services, more value-added services than the traditional preparing of the financials and reporting of the accounting and the taxes and such. So this is a phenomenal discussion, and I love the fact that we were able to kind of walk through the process and see what it would entail and how it's applied actually in business. So very well done, Erin. Thank you.
Thank you. And just know too that this is the instant assessment. As a Profit First professional working with one or being one, we do have a next level that we take the business into as far as diagnosis, and as far as the prescription goes as well. We spend time on analyzing and strategizing, and we have efficient tools that will not only help it be more intentional in systemizing it in your business, creating a service, but also in presenting it in a timely manner for your clients. So don't be afraid to ask questions around those things as well, should you have them. But Roger, I'm so grateful for you and your openness to share this. You know, I'm excited to be a part of educating people around how they can live a life that they dreamed of.
Well, I appreciate you taking the time to so eloquently describe this. This is exactly what I was hoping it would be. And just so that you're aware, the instant assessment, I kind of describe that as being the icebreaker. It's in tune with the old paradigm shift that you have with the formula of saying it's revenue minus profits equals expenses. That's kind of the icebreaker discussion. This is more or less like the appetizer, and then like you described, there's a meal coming. So that is great. So what I'd like to do is just thank you for your time. I appreciate your thoroughness here. We're going to go ahead and put in the description some of those links that we mentioned, and obviously encourage you each to take a moment and learn what it is you can do to not only apply this in your own business so that you can in fact put profit first, but also at the same time, see how it is you can actually help your clients apply these principles so that they, in fact, as owners of companies, can in fact realize the profits that they, I'm sure, intended to have. So with that in mind, just remember this: if it's about accounting, it's universal. Thank you, everybody. Bye-bye.
Thank you. Bye.